Good afternoon and welcome to the webinar, Mozambique, Time to Reinvest in the Real Estate Sector. This webinar is brought to you by the API Summit Virtual and forms part of our preview webinar series leading up to the API Virtual taking place next week. This year's API Summit is taking place online and will feature 5 days of networking, content and leading insights, and also includes the Africa PropTech Forum and the API Awards, which we released the finalists for today. We've already confirmed over 500 registered attendees and have over 100 speakers and 30 sessions throughout the 5 days. We've also introduced limited free access passes, which are now available. So for more information, please visit the website, the API Summit website, and then you can get registration details as well as the agenda details for next week online. I would now like to move on to today's proceedings. First up, we have Manuel Vieira, Chairman, Meridian 32 Group, who will start off today's session with a brief overview of the Mozambican market. We will then move into a panel discussion moderated by Ali Farouk, Commercial Director, Corporate Banking, Millennium BIM, and then we'll follow on into a panel discussion. So thank you all for joining us today. Thank you to our panel, our moderator, and I'll now hand over to Manuel, and as mentioned, who will give a brief overview of the Mozambican market, and then you'll hand over to Ali, who will introduce the rest of the panelists and kickstart the panel for today. So Manuel, over to you.
Afternoon. My name is Manuel Vieira. I am the principal at Meridian 32 Group. Meridian 32 is focused in the real estate and technology sectors in Mozambique, where we see ourselves as a one-stop shop, delivering A to Z services, perhaps with the exception of C being construction, where we just play a role on the supervision, overseeing the construction, project management basically. But along a project life cycle, we intervene in every phase, from social issues such as resettlement, environmental impact assessments, architecture, engineering, project management, right to the other end of the spectrum where we do fit outs, supply furniture, brokering services, facilities management, namely cleaning, maintenance and security. Technology might seem the odd one out in the portfolio, but every real estate infrastructure project today requires some level of IT. So very much a part of our strategy to integrate these services into our offerings. So I was going to start by setting the scene, what's happening in Mozambique and why you should be paying attention to Mozambique. I think Ali and the panel then will take the lead from a lot of the items that will be mentioned here, and will then drive a conversation around the real estate side of the debate. So firstly, I should forewarn you that I'm by nature a bearish kind of person. Having said that, I should also forewarn you that I have been proven mostly correct in my outlook over the past 6 years. So Mozambique, what do you know about it? It's located in the east coast of Africa, really long, thin country, 30 million people, Portuguese speaking. What are the positives? Plenty of land, lots of sunshine, growing population, apparently blessed with mineral wealth discovered in the last 10 years. There's a privatization drive due to start in 2021, so a lot of the government companies will be privatized. Politically stable. It has enjoyed the same party in power for 45 years. Now for the fun part, the negatives, let's call them that. In 2015, we had a sovereign debt default. We are high in the corruption rankings. Crime, particularly around the drug trade and kidnappings, is rife. Security, we have an insurgency in the center with Renamo. This has been historical opposition, but more recently, in the last 2-3 years, we've had a full-blown terrorism offensive with Islamic principles behind it around the oil and gas developments up north in Cabo Delgado. Some more peculiarities about our part of the world. Every 10 years is a change of the guard at the ruling party, and it is like starting everything from zero. think of some really poor succession planning exercise and multiply it by tenfold. So be warned, the next change of the guard is due in October 2024. We also have runaway population growth, resulting in a never decreasing GDP per capita, somewhere around $450 to $500 per capita. And then two items that will obviously be the subject of much debate later, the unstable currency and prohibitive interest rates. So what is the impact of all of this? Well, in 2014, at the height of our last growth cycle, the economy had a 5-year period of real GDP growth in the region of 7% per annum, with the GDP at the end of 2014 around about the $18 billion mark. This was a period of much happiness in my life. Since then, it's been pretty grim. It's been a hangover, basically. So in late 2015, we had the sovereign debt default with corruption allegations around that. And a year later, by December 2016, GDP had reduced to $12 billion. So from 18 billion, we came down to $12 billion. 2019 estimates are that GDP recovered to 15 billion. But now the COVID impact, we expect GDP for this year to come in at around about a little bit better than 14 billion. So you can see in 5 years, we've gone from an $18 billion economy to a $14 billion economy. The only sectors that have shown consistent growth and have outperformed the market as a percentage of contribution to GDP are extractives. And here I include the oil and gas, the coal, the rubies, the heavy sands, but also the timbers. The lumber is a big business here. And that's gone from 4.9% to 6.9% contribution to GDP. And financial services has gone from 4.8% to 5.3%. Everything else has been stagnant or reduced. So not a pretty picture. But notwithstanding this, there's a lot of hype out there about Mozambique. So what's driving this hype? Well, initially in 2008 to 2010, the coal finds were significant, and there was a lot of investment around the coal finds, and that drove the boom that we had right up until 2014. From 2010, we had the prospect of oil and gas discoveries, and that also drove the boom. And the first gas was going to go to market in 2018. Well, we're now in 2020, and the best estimate is 2022, early 2023, with one of the small projects, we're going to be able to monetize the first gas. So you can see where expectations have gone from, I think, around about 2012, 13, we thought it was going to be 5 years from now, 2018. Now looking at 10 years down the road, basically, 2022, 2023, the oil and gas projects, the first one being monetized. So let's talk a little bit more about the oil and gas, because these are the ones that are going to be driving, these are the projects are going to be driving the economy over the next 10 years. There's going to be some other ones that, particularly the coal, the heavy sands, but none are going to have the kind of impact that the oil and gas will have. And there are 4 projects really on the go. There's two small ones, a Sasol project for light oil, which seems to have stalled. Then there's Coral South, which is quite advanced. This is an offshore project and estimated about $8 billion, and is expected, as I said, to reach monetization phase in 22, 23. Then we have the Total project. This is a huge endeavor. It's a $25 billion endeavor. And the initial projections are for monetization in 24, 25. With COVID and all of this, all the CapEx budgets being cut by the oil majors, we expect this could be delayed 12 to 18 months. Exxon has put on hold its final investment decision for a $30 billion project, and we expect that at best to happen in Q4 2021. So the government is also launching a new round of tendering for new oil blocks, probably later this year, early next year. So there's quite a few projects that have the prospect to come online after these projects. And this is pretty much what is driving the hype. If we are to believe some of the projections put out by the World Bank, IMF, European Economic Bureau, Mozambique could be enjoying a 7 to 8% per annum growth from 2024-25 onwards. So in a nutshell, that's what I wanted to say. I think this is a scenario that will impact the real estate investment decision in the years to come. I'd like now to hand over to Ali, and perhaps we can have a more focused discussion around the real estate aspects. Thank you.
Thank you very much, Manuel, and to all the attendees and to the fellow panel members. I must confess, Manuel, that maybe at the end of this webinar, we must have a discussion. You spoke like a true chief economist of any of the banks represented here. So congratulations on that. And thank you for sharing the highlights of what has been the recent developments in Mozambique over the past 10 years, and also what is the outlook. We do need some light to motivate us going forward in these current troubling times that everyone in the world is facing, but particularly in Mozambique, where we have certain challenges that are still ongoing. As you mentioned, one of them being the issues in crime and terrorism. And another funny episode, as soon as you start mentioning those topics, the audience started to increase, like a typical violent Netflix series. So that was also a catch to the eye. Maybe can I invite also Luke and Edson to join the live screen so that we can start with a round of introductions by each one. Hi, Luke. Hi, Edson. I hope you are all well and safe. Thank you. So just as a housekeeping rule, I would just ask my fellow panelists to, whenever they are not speaking, to keep the audio on mute. And then with regard to the session, I think it's a great opportunity to showcase Mozambique and what positives they are. Looking forward to this country with regards to real estate and all that it's coming as an impact to real estate from the oil and gas investments that are clearly the economic drive in this economy for the next couple of years. Before touching into some questions that I've prepared to discuss and wanted to hear your opinions, just wanted to give a quick opportunity for Luke and Edson to introduce themselves. I'll perhaps start with Luke. Luke, just give us an overview of your background and what GRIT represents currently across Africa and in Mozambique in particular.
Thank you, Ali. So thank you to Kafia and his team for those insightful webinars that he has organized throughout the last few weeks, but also during the lockdown period, which was a nice way to get your mind off the fact that we were. So my name is Luc Sung-Sum-Foy. I'm a senior investment manager at GRIT Real Estate Income Group. We are a leading Pan-African, excluding South Africa, real estate company. We are just shy of the $1 billion mark in terms of asset value. So we invest and actively manage a diversified portfolio of real estate assets across Africa. We are currently invested in 8 countries on the continent. Our investments are underpinned by mainly hard currency leases with quality multinational tenants. We have a primary listing on the London Stock Exchange and a secondary listing on the Stock Exchange of Mauritius. We provide a full suite of underground capabilities for our international investors to be able to generate for them attractive and sustainable African returns, obviously within a sound risk profile. Thank you.
Thank you, Luke. Maybe Edson, you want to share some words about yourself and the bank you work for? Edson, I don't think we're hearing you. Look, Manuel, can you hear Edson?
No, Edson, is your mic on?
Okay. Maybe Edson, just try and put your mic off and on, and we maybe continue just as a way of introduction. I also would like to introduce myself. My name is Ali Farouk, as Kfir mentioned earlier on the introduction to this panel. I'm currently serving as the commercial director of the corporate division in Millennium Beam. I've been here for 2 years. We obviously support across the sectors many businesses, and also I have an extensive experience of approximately 10 years in property development and assets management in Mozambique. Maybe just let's try Edson again once again. Edson? Okay, so Edson, I'll come back to you for your introduction as soon as the sound is sorted. Manuel, you gave us a brief overview on the current state of economic affairs in Mozambique, which is very interesting. I would just add to those list of recent troublesome episodes what we experienced with the cyclones in 2019 in Beira and Pemba. COVID obviously has an effect across the world. Mozambique is no exception, and we are seeing our patterns of growth and consumption being diminished in the last couple of months. But still, there are still projects, and particularly the ones that I've been following closely are infrastructure projects alongside the investments being done in oil and gas. You work with many different types of investors, the likes of GRID and others. And I wanted to understand from you and your experience and your discussions that you are having with these clients of yours, how are you proposing these companies to address the risks of all the things that you mentioned, the issue of the current governance around the default on the debt, the crime and kidnappings, the insurgency, and the recovery from the cyclones? I mean, there's a lot of factors that are internal, not necessarily external, but just give us an overview what type of advices you are giving your clients so that we can try and also give some light to the audience.
Okay, so the 2 cyclones that we had last year obviously had an impact in the center and the northern part of the country. Those impacts affected primarily the population, did not have such a large impact on the oil and gas, primarily because these projects are still in their infancy. So if we look at the oil and gas up north, what we see is some big construction companies setting up shop. These are primarily camps with, I wouldn't call it precarious, but with movable accommodation. At the moment, they're probably in the 400 to 500 people camps, but at some point expected to grow to somewhere between 5,000 and 8,000 construction workers living there. But we don't expect the cyclones to be a repeating event in a 5-year cycle. And we think the other issues that are really very concerning are the security and the crime. And what we see as an impact of that is that operations are going to be concentrated in perhaps one economic zone. So we're looking at Pemba probably housing everything is going to happen in Palma and Fungi. So they will have the front end workers that are running the plant, and then the back office will kind of be in Pemba. And we see also, because of the result of the experience with COVID, that a lot of the back office that was previously thought to be done in Maputo will probably be done in Italy or in France, where these projects have their head offices. I don't see, I think the experience with COVID has been very good, particularly at this kind of level of employee. So I see a lot of dislocation of posts that previously would be done in country. I think those will be done in other countries.
Well, thank you for that, Manuel. Look, obviously, you mentioned your impressive portfolio in Pan-African. In regards to Mozambique, and in detail, how much investment has GRIT done, and are you coping with these recent challenges that we've been facing with COVID and so on? Yes, Edson, we can hear you now. Just ask you to hold on for a second. I'll give you some chance to speak right now. But back to you, Luke. How is GRIT managing the current troubling waters in Mozambique and elsewhere?
Thanks, Ali. So to your question, we have at the moment around 38.6% of our portfolio which is exposed to Mozambique. That comprises of 9 assets across the different sectors, being office, industrial, retail, corporate accommodation, and industrial. I think quite a few interesting points that Manuel touched on in his speech in terms of the security concerns, but also in terms of the opportunities around Pemba and Palma. So we have an asset in Pemba, which is the Bolloré Industrial Warehouse. We are currently undergoing a refurbishment/redevelopment of the asset for the purpose of meeting the tenant specifications. Obviously, this project was in the pipeline before COVID took all of us by surprise, but we're forging ahead. So the project was announced last week through our trading announcement. The works on site started in May and now are gaining traction. Obviously, there are delays in terms, or rather longer lead times to order the materials for the construction, given the fact that a lot of the raw materials are also imported from South Africa. But at the moment, we do not foresee delays to the development pipeline. Obviously, we monitor attentively what's going on in the Cabo Delgado region and the attacks. And obviously, this has a very unfortunate impact on the population around that area. But from an investment point of view, obviously, we take the necessary precautions. We would never put any staff or tenants at risk. But this has not really impacted the project or the development timeline. And I think what we do mention obviously is that in countries such as Mozambique, we take insurance cover such as the political risk insurance, but also importantly, political violence and terrorism insurance cover to protect the economic interests of our shareholders.
Interesting, Luke. And what about besides the development in your complex in Pemba, what other opportunities are you currently looking at? Where do you see, from your experience, also presence in other jurisdictions in Africa and following their patterns of growth, where do you see Mozambique evolving in terms of real estate development and opportunities that obviously GRIT will be looking into?
Sure. I think in terms of obviously the topic of this panel is also around the oil and gas developments and that's happening in Mozambique at the moment. I think from our point of view, the corporate accommodation is obviously an asset class that we look at in Mozambique. We have the Acacia compound in Maputo, where we have the US Embassy as a tenant. We recently completed the development of new units in our VDE compound in Tet, with Vale as the tenant. So I think that asset class obviously has a lot of attraction for us. Interestingly, the one in Pemba that I mentioned before, there's a part of it is offices and part of it is warehouses. Even though some of the back office functions may be outsourced or run from outside of Mozambique, there will always be a need for offices in country for a portion of the staff component. And that also talks to the rest of Africa, because I think connectivity, for instance, is still a big issue across the whole continent. So as much as we want to believe in work from home and that kind of flexibility, we're still seeing quite some demand for office spaces, but I would say more dependent on the location and the kind of business being run. I think obviously there are other opportunities that we look at, which are a bit, let's call it more thinking outside of the box. We have 2 retail assets within the portfolio. Some of them, as we all know, retail has been under strain throughout Africa, probably the worst hit asset class together with hospitality because of COVID. So we had been experiencing a vacancy in this asset, but what we are looking at the moment is opportunities to offer some form of primary healthcare services in those malls. And the reason being that some of those malls are primarily located underserved areas in terms of healthcare facilities. And I think, with the COVID, which COVID really just brought discussions which probably would have taken years to happen forward. And we're now looking at interest from international medical operators to look at that kind of retail healthcare offering.
That's interesting, and that alludes to a fact that I haven't been seeing in discussions that we've been following since COVID started, which is perhaps looking at repurposing some of the existing real estate assets to accommodate for other needs. That's very interesting. Maybe let's try Edson now. Edson, can you hear us?
Yes, sure. Hi, Ali and team,
Hi.
And welcome to. It is a pleasure to be part of this event. Just to talk about myself. So, I am a senior investment banking within Standard Bank Mozambique. So I look after both the real estate finance and the energy and infrastructure portfolios. With regards to the actual real estate finance sort of solutions that we provide, we support across lending and advisory services and across asset classes. We are, as Standard Bank Group, the leading finance institution in the continent, and with regards to real estate specifically, we're also the largest financier within real estate in the rest of Africa, excluding South Africa. And that also spans out to Mozambique, where we've got a significant large exposure in real estate, in the various real estate asset classes. That's sort of the introduction from my side. Thank you.
Thank you very much for that, Edson. And obviously, Standard Bank having a historical presence in Mozambique and also being one of the largest banks alongside with BIM is in a unique position to look at what developers and real estate players are doing. Going directly to you, Edson, and giving you also the opportunity to share your experience during this period of COVID, essentially, and also recent events such as, let's say the cyclones and the insurgency coming along. Have you been seeing your typical client or developer changing the nature of the cap structure in terms of doing investments in real estate? More equity, less debt. Obviously, the interest rates have also been decreasing, which it's at some point relevant, but there's more risks in the economy, there's certainty. And it's interesting, or would be interesting to know how banks are looking into those aspects as well to mitigate those risks.
Okay, now that's a very interesting and a very pertinent question. I mean, both the insurgents this year and COVID have actually impacted Mozambique, similar to other parts of the continent and of the globe. We've seen definitely we've witnessed impact in our clients. We've seen that we've seen impacts across asset classes. And we've also witnessed that clients have not progressed with significant capex investments at this time because of that. When in looking at where they are and how the bank has been looking at supporting them during this time, we have provided COVID relief structures to assist to them, and also restructuring facilities. That includes both covenant relaxation structures, includes things like extending tenors, reducing sort of interest rates where warranted, and to some extent also interest payment reliefs. It is obviously a time that it's challenging for our clients, but through this partnership with them and understanding specifically for each asset and for each client what the pain points have been, we have been able to also in some instances work with sponsors to right-size the debt where warranted, and progressing in terms of if we still see opportunities in the real estate sector and how we support. Yes, we still see obviously more localized and related to the actual realities in each place. So when we talk, we initially expected obviously that this year we would see lots of developments, but effectively those have to some extent been impacted by those realities I've just spoken about. But there's still localized opportunities. When we look at, say, the Palmas of this world, where there's still requirement for accommodation, there's still requirements for industrial services to store and move product, and we have supported and where warranted, where the right tenants, the right, say, lease profiles, and also the right sponsors, we have been able to support in unlocking significant funding opportunities, even in those difficult times.
That's great. That's great news, Edson. And just then, following that line of thought and following some of the challenges as myself as a banker see happening in the market, there is a continuous evolving on the regulatory framework for Forex, which at some point creates uncertainty also in the market. Recently, this year already, there's been 2 notices to the foreign exchange law, and this affects how companies like Grit and others invest in the country. Can you tell us a little bit of what has been your experience in terms of advising your clients and investors to mitigate these challenges, and also how do you see liquidity in foreign exchange in the market evolving until the end of the year? Edson, I don't think we can hear you. Just check your mic again, please.
Yeah, thank you. No.
Yes.
So starting off from your last sentence, we publish extensive economic research covering Mozambique, and also sporadically we have flash notes which provide an institutional view around where we see exchange rates and interest rates, and also economic growth. Our latest publication speaks to, obviously, to some level of currency depreciation, and also to some level of contraction in economic growth this year, with sort of an uptick slower next year and ramping up the following years, and that is a view that we hold at the moment. But more around the issue that you've brought to, and there is obviously a push over the last couple of years towards match funding and towards more of usage of local currency in the market for local currency local currency earners and sort of size of the market to service more of export, and in line with sort of what. And we, at least, I mean, at this, it's obviously evolving, but there has been also changes in the regulatory framework that have allowed for liquidity in the market. For instance, in terms of exporters being able to retain proceeds the market is currently, there's been challenges this year specifically with a limited export pool. But we have the exchange regulation has not precluded us of supporting our clients. We have, where warranted, supported them through our Mozambique balance sheet, but where that is not possible, we have been able to also support them to the extent that we still see that the actual leases with tenants are dollar-based, and we can take a view on the ability of those sponsors also.
Let me pick up on that issue of the tenant leases and maybe pose a question to Luke. Look, some of your assets are corporate offices, some of them are warehousing, some accommodation, all of them, let's say, back-to-back or arm's-length transactions with secured leases. Given the current scenario in COVID, have you been seeing and being addressed by your tenants in order to renegotiate these leases? Because this is obviously something that would come to mind in terms of cost controlling in such an uncertain environment.
Thanks, Ali. I think the whole business model of Grit is really reliant on the strength of the counterparty. So, I mean, right from the beginning, when the investment team look at any new acquisition, it's always on the back of a quality tenant with a good corporate parent guarantee, a strong lease that, as Edzard mentioned, would obviously assist in the ability of Grit to raise finance against those acquisitions/development. So I think from that point of view, obviously, that does provide us some form of security in the sense that those tenants that we have in Mozambique, the likes of Vale, Exxon, Bolloré, or the US Embassy, are really A-grade tenants who we term as sticky tenants. So they are able to weather those kind of difficult downturn in the economy, which obviously COVID brought, and of which the impact is probably going to be felt for some time still. But that really has helped in the fact that obviously we keep also a constant dialogue with those tenants. We're there principally to help them and assist them. I think in this current environment of uncertainty, it's always important to have collaboration between landlords and tenants and see what kind of measures we can adopt to help them and support their businesses. So to your question, Ali, I think from our side, in terms of Mozambique in August, we had close to 90% collection in terms of billable rentals. We had very minimal, if quasi-nil, concessions provided in August. I think the only small amount that was provided was for our retail mall, in one of our retail mall. So I think, the fact that we are close to our tenants, the fact that we support them has helped to ensure that even though there might have been delays, especially during the harder periods of lockdown where everyone was caught by surprise, we haven't really seen those kind of demands for renegotiating leases, which are still to run for a few years.
Thanks, Luke. And Manuel, through your consulting company, you have a bird's eye overview of a lot of the investments and also trends that are happening in the market. Just wonder if you can share some light in two aspects. One, with regards to housing and housing for the expats that have been coming along, aligned with this multi-million-dollar investment, but also how do you see this sector or this segment of real estate evolving in the next couple of years? I mean, we've been seeing a trend in accommodation for middle and high income earners, but we don't see a lot in the more affordable housing. And on the back of your answer, I would ask then perhaps Greet if you look also at opportunities on this type of more social responsible projects as well to accompany the growth of the rise in the middle class in Mozambique. Manuel, can you please check your mic if it's on? No, we can't hear you. Manuel? Okay, so while we wait for Manuel, oh, okay, we can hear you now, Manuel. Well, actually, no, I think we lost you again, Manuel. I'll move then back again to Luke. Luke, as I was saying to Manuel, Greet has taken stakes in affluent income housing projects associated to blue chip tenants. Is there any interest of Greet in looking into other schemes where non-blue chip tenants are there, or even previous to this panel discussion, we talked a little bit about the development stream in Greet or Gateway Delta. What type of opportunities would there be that you'll be pursuing through Gateway Delta as your development arm, and if they would touch or not in affordable housing?
Yeah. So, I mean, from a Greet point of view, obviously, we are invested in corporate accommodation, as you mentioned, for blue chip tenants. We haven't really explored the asset class of social housing. Again, it speaks a lot to our investment mandate, looking for hard currency leases with multinational companies. So this is really by virtue of the way the current investor base and also the current investment mandate. However, to your point around social impact projects, obviously that's something which is very important for us and for our investors. We are currently looking at developing 2 hospitals in Mauritius, which obviously have a big impact on the society here in Mauritius. And we are looking at also rolling out those kind of developments across Africa as well. So obviously you mentioned Gateway Delta Real Estate Africa. This is a company in which we own a percentage. It's an investment in associate. From our point of view, Greet Real Estate recently changed their mandate to also allow us to invest in developments. So we are allowed to invest in up to 20% of our gross asset value in greenfield projects. But however, on the principle that the lease is secured upfront before the start of the project. So this is the case for the 2 hospitals I mentioned earlier. And again, what COVID has brought and the fact that we constantly have to reinvent our investment strategy, I think we've now having renewed interest with the likes of DFIs to look at potential products that we can structure for them to enter through Greet or alongside Greet or partake in some way or form with Greet. I think that obviously will probably in time increase our scope and range in terms of asset class that we can touch on.
Thank you, Luke. Manuel, let's test your sound again. No, sorry, I can't hear you.
Manuel,
okay.
maybe
Let me divert.
Maybe maybe perhaps, Manuel, if you either want to reconnect or use your laptop or computer microphone and audio, maybe if we can just try one of the two of those.
Okay, thank you, Kfir. Edson, as an investment banker in one of the largest banks, you see a lot of the things that are happening. Obviously, oil and gas is mainly focused in Pemba, Palma Fundi, and also Maputo for the headquarters. But give us an overview. This webinar is also about Mozambique. What else have you been seeing pockets of development in terms of real estate across the country that you could highlight? Beira and Nampula, Tet, the main economic cities besides Maputo. Also, we have other infrastructure projects coming up in Kaliman. Can you give us a little bit of what you've been feeling through your bank of what's happening across the country?
Hi, Ali. So no, thank you. So I think in responding to your question, I think we look at this from say, hello, can you hear me? Hello? Hello?
Yes,
Yes,
we can.
can hear you.
Okay, thank you.
We can hear you,
Yes,
Edson.
no, I was saying in looking at yes, specifically where what it pertains to projects in Mozambique, and mainly on a forward-looking basis, we see this on a two-tiered approach. And by two-tiered approach, I mean the first wave of developments are likely to be linked to direct supply of either labor through retail, industrial, and warehousing, say in the Pemba and sorts, and then obviously some sort of opportunities in CBDs. Where most of the head offices are located. We are aware of projects across the country that will then fit in under the second leg of it, which benefits then from spillover effects from the development on the LNG space, and how the income generated through those then translates into opportunity throughout the country. So when in looking at that, I wouldn't restrict it to say that the investments will only be concentrated in Palma and to some extent in Maputo. We would look at the second leg of it, which is then the impact that LNG is going to have throughout the country. And in looking at that, I think we have to be also mindful that specific asset classes are obviously going to be more prevalent in some say provinces than others, but in general, the looking, for instance, at increased say disposable income over the next years is going to fuel say potential retail developments in the likes of Beira as well, because you've got sort of an impact countrywide. So that's sort of the way we approached it, and we sort of discussed it upon the way that we're willing to support the real estate sector in general across the country.
Manuel, back to you. Let's
Can
just
you hear me now?
your sound. Yes, perfectly. Thank you, Manuel, and welcome back. Manuel, earlier I was asking you a question about your ability as a consulting company to have a bird's eye view of what's happening across the country and across the sectors of real estate. Moving a little bit forward with regards to the previous question I've asked you, and we have a lot of people in the forum that are from different spectrums of activity across the value chain of real estate. Where do you see, and just before we move on to the questions that we have coming up, where do you see the gaps between what the oil and gas companies are looking for and the offering coming up, or where there is actually gaps in the offering so that then maybe some of our listeners can start developing projects for Standard Bank and Beam to finance and grid to offtake.
Okay, thank you. So perhaps to tell you the segment that I'm most pessimistic about is housing. I see the top end of housing being catered for, but middle and lower end of the spectrum of housing, I see this great migration that happens, particularly in the southern cities here of Maputo and Matala. There's quite a significant amount of stock in Maputo, and as demand increases, the owners move to Matala and the expats take up that gap. When the market goes bad, the expats leave, go back. These people migrate back from Matala to Maputo because the rentals come down. This is a scenario currently where we have significant vacancies in housing, and we see that trend happening. Then on the industrial, we think around the projects, wherever the heavy sands, wherever the rubies, wherever the coal, the oil and gas, we're going to see, and around the ports, we're going to see significant requirement for new spec industrial developments. Office, I'm kind of uncertain what's going to happen with offices. I think there is a lot of stock. I'm uncertain that we're going to see the levels of expats that we saw previously, although new projects are going to come online as well. So I think it's going to be a while before offices become, we see the demand exceeding supply. What I'm really bullish about is agriculture. I think government has committed to spending 10% of its budget in agriculture. So I see a lot of potential there for all kind of infrastructure around that. And my passion, which is something I've been saying for the last 10 years, is retail. I think retail has challenges. We see a decreasing consumer spending and disposable income because of the economic conditions. But historically, it has been grossly underserviced. We see demand still from retailers that want to go into some kind of formal structure as opposed to be in the high street or in a standalone shop. So we're very bullish that that's going to happen. It's not going to be your strip mall and your high street mall. These are going to be centers maybe in the 4,000 to 8,000 square meters, close to the communities. They're going to have extended hours, and they're going to be having the kind of retailers like YouSave, Pep stores, the more bottom end of the market. And I see a huge potential there for a rollout, not only for retail stores, but also for the distribution centers around them.
Thank you, Manuel. Well, I'll move on now to the questions I've been getting from the attendees to this webinar. One in particular is asking about the housing sector, and I would perhaps start with you, Manuel. The attendee mentions that I have a particular interest in real estate housing. So the question is how the panelists see the current market status, since we know now that the old good days of good returns are gone. What are the estimates moving forward? So Manuel, you just mentioned that there's a lot of affluent offer in terms of the high end of housing. You mentioned that there will be some vacancies or lack of demand because these places are being vacant. Expats are going home, but still, I see, in my opinion, mid-income earners that will now, and young people that are well educated and joining these oil and gas and other multinationals and big players in the market looking for housing in the next couple of months and years. Do you agree with this view from my side, and particularly with regards to returns to the investment and yields? The affordable market, does it offer good yields?
Ali, I'm very skeptical of the affordable market, and my experience is that these employments are precarious in the sense that rotation is very big. It's huge, the amount of rotation of personnel that happens. And I think the pool of people that are available for this kind of housing, and we have to bear in mind, affordable housing in Mozambique probably starts at the $100,000 mark. It's very difficult to get housing at below that kind of cost. So I think it's going to be difficult over the next 3 or 4 years. It's going to be very difficult, I think, to develop any of those projects.
Okay. Thanks, Manuel. Edson, a question for you, and it's around the question is: how are banks and insurance companies seeing the risk factor in developments in Palma? Is there room for lending or insurance for such projects? So you touched base a little bit earlier about this. Maybe just reframe, state your views again on what risks and how Standard Bank considers mitigating those risks for investments in Palma.
No. So thank you. I'll start from Palma is rich in obviously natural resources, and that's what led to the developments in there. But there is a whole range of services that need to be developed to support the project itself, and those will range from, like I said, corporate accommodation to the expats and the people working in there, to opportunities in retail, because those people obviously need to shop around, and there is also need for services like industrials, and we have seen in the market some element of developers that have ventured into that space, and that have initiated sort of developments to support those projects. And yes, we have looked at those opportunities. We still believe that opportunities are there. We look at risk mitigant factors, obviously, on our side, and those range from looking at sponsors with a portfolio of assets that do not necessarily only restrict to taking risk on Palma, to looking at some elements of external credit enhancements and the types of guarantees and likes, and we also look at the strength of, say, the tenants that are the actual tenants in those projects, and how strong they are to provide rentals and being able to obviously service our debt through that. And to your point around insurance, yes, it is insurance in those. Generally, most of our tenants have insurance, but where required, we look at enhanced sort of insurance covers to also mitigate our risk. But the crux of it is, yes, we believe that it's still possible to implement projects there, and it's still possible to unlock funding to the extent that those parameters are met.
Okay, thank you very much for your inputs, Edson. We are running out of time. We had one more question, but we'll take it offline to the viewer that is asking it around the Port of Beira and logistics. I would like to thank all the panelists for being present, all the attendees to attending this session. I think Mozambique has a brilliant future. There's hurdles like in every other country, every other economy, and if we all tight and we look with hindsight and with creativity, we will be able to make the best of supporting the economy, the development of its people, and key sectors that are structural for the growth of this beautiful country. We look forward to hearing and seeing questions from you offline. You have our contacts. I think all of us are on LinkedIn. You can follow up on us there. And once again, thank you everyone for the time that you spent with us. I hope this session was fruitful, and we look forward to seeing you in Mozambique.
Thank you.
Thank you. Thank you, Ali, and thank you to the panel for everyone participating. I think it was a very good discussion, and obviously Mozambique does have its challenges, but I do think that the long-term prospects are very positive. And yeah, it's good to see the different perspectives and just discussing not just the situation in Maputo, but across the whole country. So thank you once again for everyone's input. Thank you to our audience for tuning in. And yeah, we look forward to continuing the discussions next week. As I said, we have a main 2-day agenda, which is taking place between 30th September, Wednesday, and Thursday, 1st of October. We'll have very high-level discussions where obviously Mozambique will be one of the talking points as well. So we're looking forward to that, the API Summit week next week, and obviously the main agenda taking place between Wednesday and Thursday. So thank you once again to the audience. Thank you to the panel. Thank you, Ali, for moderating, and we'll see you next week. Thank you.
Bye, everyone. Thank you.
Thank you very much.